Good afternoon. My name is Jamal Wiley. I am an advisor for the investment group, Transcend Investors. This is week 8, is it? Week 8. I want to give you a brief overview of what took place in our portfolio. This week, we introduced Kraft Heinz Corporation to our portfolio. We purchased 148,000 shares at $32.14 per share on Friday. They closed at $32.61, which is equivalent to a 28-cent increase already. Kraft Heinz Company is also known as Kraft Heinz, is an American cuisine company that took form due to a merger of Kraft Foods and Heinz. Their headquarters is located in Chicago, Illinois, and also Pittsburgh. They're the third largest food and beverage corporation in North America. They are the 5th largest in the entire nation. Kraft Heinz Company's annual sales was approximately $26.2 billion as of 2018. An interesting fact about Kraft Heinz Company is that they rank number 114 on the Fortune 500 list of the United States' largest corporations as it relates to revenue. Kraft Heinz shares rose above 13% on Thursday following the Consumer Cuisine Titan that was published, which is better than expected compared to the report they released last week.
Okay, so this week my name is Devin Joyner. I'm a financial analyst for the group. This week I want to speak about the company that I just recently sold, which is Alphabet, aka Google. So we bought Google for 3,860 shares for $1,228, and we just recently sold it at 3,860 shares for $1,315. So gained a pretty nice profit of about $300,000 for this transaction. And I repurchased the stock because it's doing so well and it's continuing to grow. So I repurchased 3,750 shares for about $1,316. And at the end of the day, I will make sure that I continue to watch this one. And if it continues to do well, maybe next week, if it's doing even more better, I will continue to watch it and maybe sell it again for another profit. Another company that in my portfolio that is doing very well that I'm gonna maybe sell soon to gain a good profit for the portfolio is Netflix and Incorporated. We purchased 20,000 shares of Netflix Incorporated for $271, and currently it is listed at $293. So that's performing pretty well currently now, and that's something else I would like to keep an eye on. The other stocks that I have is Entergy Corporation, and right now it's low. It's down about $2 from the original price that I purchased it at. So I'm going to wait for that one to get back up and maybe break even, if not gain a little more before I sell that one. And the last company that I do have is Facebook, and that is doing fairly well as well. It's up right now, and I want to make sure that I keep an eye on that. So eventually I'll end up selling that and purchasing a new company.
Okay. My name is Messiah Marcus. I'm a floor advisor and operations oversight for Transcend Investors. So today I want to talk about a couple companies in my portfolio that I invested in. So this week, the trades I decided to make, so I decided to sell the rest of the shares of Terraform Power Inc. because we only had about like 9,000 shares of that. We already sold most of it because it wasn't doing as good as we expected before. And I kept a couple because it wasn't doing bad, but it went back down, and I figured it was only a small amount. So I ended up selling the rest of that. And then I invested in QCOM, which is Qualcomm Incorporated, who was, after recently beating their earnings and their estimates, had a 5% stock surge for Q4. So it's looking really good for them to start off, and the price is already jumping up. It's up at 8.34%. The price is currently 91.65, which is about 7 more than what it was yesterday. So we're gonna just invest in that, and it already seems to have been a good investment because we purchased this Qualcomm not too long ago, and we're already about up $20,000. As for the other investments, so we have Yum China, which is fluctuating right now. So it's been going up and down for us, but the markets are still up right now. So we're gonna just hold on Yum China a little longer because Yum China hasn't been doing that too bad for us. As for Under Armour, so Under Armour has been down a lot for us. It was doing good last week, but it's down for us now about 500,000. I don't want to sell Under Armour just yet because in recent news they have gotten really good news, and I think that it might go back up. As I said previously, the markets do fluctuate, so as we're learning more about our investments, I think I'm gonna hold on to Under Armour, just give it a little more time. And the reason why also is UPS. UPS is one of the ones I wanted to sell as well because it was down a lot. But after hearing the news of UPS trying to get more employees, about 50,000 to 100,000, UPS has went back up for us, so it's looking really good. So right now, all the stocks are performing pretty well. Intuitive Surgical is still at where it's at, about $300,000 profit off of it. And we will look for more investments in the future, but I do think Qualcomm was a great investment to start off this week because, like I said, we were up 20,000 just for investing in it. So that's been all for my stocks.
On October 29th, General Electric was at $9.07. On Friday, November 1st, it reached $10.38, which was more than $1 increase. To go back over GE a little bit, it's infamous for its digital industrial offerings as well as its other products and services. The company's main focus continues to be around renewable products and aviation. The company currently has a gross margin of 21.2%, with a total revenue of $89.9 billion. On October 31st, Seeking Alpha reported that GE was experiencing great turnaround due to reduction in restructuring costs and other successful parts of the business in terms of income growth. Currently, GE's still optimistic stock as it's produced as of October 7th is producing as much as a 22% return for our portfolio. On October 28th, Pfizer was at 37.28, which increased from 38.39, which is also another winning stock with more than $1 increase. PE, what's really helping Pfizer is operational growth. Third quarter from revenue contributed from consumer healthcare was also a factor in the successful performance of the stock. Pfizer appears to be doing well. Opportunity still exists or seems persistent, as the FDA reported a chronic shortage of certain drugs in the U.S. market, which represents opportunity for Pfizer. Lastly, American Airlines is experiencing a slight decline. It does not, with American Airlines, it's currently competing with Delta in terms of comfort and leg room. American Airlines also reported, despite difficulties with their 737 MAX, American Airlines increased profit and managed to reach double-digit growth in adjusted earnings per share, and an increased capacity, and unit revenue growth still seems to be optimistic due to lower fuel costs.
Okay. Hello, my name is Carter Bird. I'm an analyst for the Transcend Investors Investment Group, and I'll be talking about some of the stocks that some of the companies that I've invested in. First company I'll talk about is Axon Enterprises. So Axon Enterprises had some inconsistent performances, and mainly their quarter 3 performance is expected to report an EPS of 26 cents on a revenue of $122.7 million. So the market really reacted by dumping a lot of Axon stock. It dropped to 18% and has mostly continued to fall, and now trades 24% below where it was the day before last earnings report, and more than 30% below the 52-week high. Yet the indications that we've seen from the market in the original response showed that this was an overreaction to the market. So we don't really feel comfortable selling all of our Axon stock just yet. With the company scheduled to report a third quarter earnings on Thursday, November 7th. We're going to see what the investors can expect. We feel like the market reacted by dumping Amazon's stock to 18%, is mostly continued to fall and now trades below 24%. But Axon quarter 3 revenue it could be reported between 120 million and 125 million, which is as much as 19% up from last year. Even subtracting 3 million pushed into the quarter from the supplier issue, it's still a 15% increase, which is on par with the year ago gains. Analysts have staked out a middle ground with the consensus of $122.8 million in sales, while they forecast earnings that will grow 30% year over year to the 26 cents per share. A lot of this can be attributed to the TASER 7 they're going to be launching in this third quarter, which is going to be a big incentive for law enforcement agencies that are looking for like greater accountability and they're trying to upload to an eco-friendly TASER system. So this is going to really help, I feel, with their stock. Another one of the stocks that I'm invested in currently is the Brookfield Infrastructure Partners, which is recently just announced that they'll be making a split with the new Canadian-based organization, BIPC. So we anticipate this split for the new corporation will offer more tax-efficient dividend income for investors that hold Brookfield in non-registered accounts in the LP distributions. The dividends from the newly formed corporation will be considered qualified dividends for the U.S. investors and will qualify for the Canadian dividend tax credit for Canadians. Also, Brookfield expects that the new corporate structure will allow for the firm to be included in more indices, driving demand for the shares and capitalizing on passive trends. So we feel really confident about those two stocks moving forward. The other two stocks that we have invested in are Apple, which closed the week at a price of $255.82 per share, which represents 2.84 increase from the previous week, and Majestic Silver Corp, which it closed at the price of $10.99, which this past Friday, which shows a 12.32% from the past week. So those are kind of how our stocks were performing recently.
Thank you.
Thank you, Transcend Investors.
Investors.